The following is an excerpt from an askSlim member video. Subscribe to our channel on YouTube and share it. We put tons of new videos out every week. Like this video, give it a thumbs up, and follow us on Twitter at askSlim. Email matt@askSlim.com and request a demo of our technical analysis services, trade planning tools, and amazing video workshops. Our services support all trading and investment styles. Please do enjoy this video. We're going to switch over now and look at the energy market. This is light crude for those of you that are brand new here. This is the 10-year weekly. This is a 2-year daily. We're looking at cycle analysis. Cycle analysis looks at money flow, and it's a kind of a visual manual type of analysis where we look at the rhythms in the markets, and these are cycle brackets on the bottom, and our goal is to find these repeating rhythms in the market, and then using multiple type indicators, momentum indicators, support resistance zones, and multiple time frames, we then can extrapolate out of that what we think are the highest probabilities for occurrences forward. We're looking at time and price projections, which is pretty unusual compared to most other styles of analysis. So here we see light crude moving up. This did a lot better than we thought it was going to do several weeks ago. We figured the June contract would see something where weakening came in because of the what we saw in May, where it fell to minus $40, and nothing like that happened at all. In fact, maybe the shorts that were planning on that didn't get paid and then pushed the market up. You can see the big resistance right over here that's upper in that 35 area, a little bit higher. We're projecting it to be able to get up there. We're following this shifted dashed pattern, as you can see right over here, as what appears to have the dominant force in here. This one right over here, which is, you can see where the lows are lining up right like that. That was the original pattern, but then this big decline lengthened it, so we shifted out over here. We leave these older patterns because these still may be effective, and especially this big one may cause some decline right in here, so we're leaving that in there, and we tend to do that because you can't have multiple cycle patterns that are active, and when you learn cycle analysis, some of the books and some things you teach will have, maybe multiple, many more. We have 3 on here. They might have 5 or 6 or 10 cycles on there, and there's infinite number that can be at play depending on the time frames. We try to keep it simple with the most dominant visually there, so it's not incredibly confusing. Again, we're also concerned with momentum, and this is your momentum indicator here. Here's where it turned up right over here, and that is a positive condition. So we're looking for it to stall in this zone up here, up in the 35 area, plus or minus a little bit, and then begin to move down and eventually come down and test this area right down here around 25 bucks. So that would be the highest probability forecast that we could give it based on what we see now. Now, if by some chance, and I think it's a long shot, you got way up over here to this next resistance, that's at $42, wow, then this would all change. The dip would still be there, but it would be to a higher level. So the market guides us and tells us how to put in the highest odds forecasts based on what we see. Here is a very bullish pattern. Now, those of you that are students understand that when I put the word swamped in there, that means that the upward momentum, the directional component in the sum of all of the components is so strong that it will not allow a correction where there should be here. That generally gets you another rally, as you can see, this positive pattern. Now note, we're only projecting it up to that resistance up around 35 bucks. Here's your 89-day moving average coming down. Maybe that's up around $38. That, of course, is a possibility. And here are your support numbers around 28.25, and there's that number around $24 at that next support. So we're looking at those numbers to get tested somewhere out over here. And we learned a lot from what happens in this next week or week and a half. You can see we're just forecasting a small dip in here for a couple days. and then moving up again. This is a bullish pattern when we look at that on the very short term, and that says that this intermediate term here is not likely to top yet, and that's why we're using this information right over here on the daily chart to project out over here and say, well, it's not ready to turn down yet. It probably does in several weeks, is what we see in there. So that is a look at light crude, which is a lot stronger than it was.